Alrighty, what is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some stock analysis for Fiserv stock. I guess that's how you say it. It sounds too much like Pfizer to me, so I don't really like it, but I guess it's called Fiserv. And I just bought this stock today, 30 shares, $61 a share. And that is because, as you can see here, the stock is down over 50% in the last month. About a year ago, this stock was $230, and now it's only 61. Okay, here's the past 5 years. As you can see, we are definitely past the 5 year low at this point, and the stock is heavily beaten down. So let's do some analysis into why that is going on. Now, I believe here we're going to have to change the screen I'm sharing to this one. So let's move over here. So there's a couple bad things about this company, and then there were some good things, obviously, that convinced me enough to buy it. The first good thing here is the market share. This is one of the things that made me buy it. Okay. So I asked chat, what is the market share for this company? In the US core banking core platform provider space, this company reportedly serves 42% of banks and 31% of credit unions. That's really good. That's a lot, right? Among credit unions, Fiserv had about 27% of the credit union core processor market. Okay. In online payment processing, does about 16%. In the global pan-industry professional services, financial services tech peer group, it does 14%. So blah, 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 with competitors like Visa and PayPal and MasterCard. As you might imagine, there's a ton of different payment processing companies. I literally just did a video a couple weeks ago on another stock I bought called Shift4 Payments. They're also a payment processing company. I also own PayPal too, so I own a lot of these. Um, so it is competitive, okay, and that's probably why they're losing market share, as you're about to see here in a minute. So they did report earnings. The earnings were not very good, and that's one of the problems. Which, if we look here over here at Yahoo Finance, let's just do a quick thing here. As you can see, they did $8.8 EPS a year ago. Now they're doing 8.6 this year, then 8.3 next year. So it's not good. But that is only EPS. That is not revenue. Revenue is growing 4% this year and 2% next year. So not much of a growth company, but it's still, they're at least doing more in sales. That's the important thing. It's just their profitability that is going down. Then the other piece of good news is that here it's kind of a two-part thing. One is that a couple weeks ago, well, right after the stock dropped, one of their insiders, their director, bought $600,000 worth of the stock. Okay, so that's piece number one. Then, if we go to this page showing super investors, all the different hedge funds and billionaires, and we go to last quarter buys in Q3 of this year, this was the number one bought stock by super investors with 9 buys. Okay, just think about that. So the bad news I'm about to show you, keep that in mind too, because it's not good. But the fact that it's the most bought stock by 9 different super investors in the last couple months, and one of their insiders bought it, it makes me a little bit more confident, right? That I'm not the only one seeing opportunity here. Now, there always is the chance that even though it's a low valuation, it's kind of a trap. That's always a chance. But in this case, with the market share being the way it is, I am I'm pretty happy taking a chance on this one because they have such high market share. As you can see, the P/E ratio is only a 7. It's pretty much priced like it's going out of business. Not many stocks get down to a PE of 7. So this is now a $33 billion market cap, and they did $21 billion of revenue. Okay, what is that? That's a 1.5 price to sales. That's nothing. Now look at their net income and free cash flow. Even though it said EPS was declining, that must be on a different either what's it called? GAAP or non-GAAP. I forgot which website uses which, but look at the EPS, the net income, and the free cash flow here. They're all phenomenal. They're all still trending in the right direction. So that's what I like to see. They're doing $6 billion of free cash flow. That's phenomenal, right? I mean, look at this trend. It keeps trending up. Net income is over $3 billion. And again, this is only a $33 billion company. Now, for the bad news, not only does analysts have them having negative EPS growth, but look at their debt. This is really bad. I don't like this, but I mean, the good news is that interest rates are coming down for one, I guess. And then the other thing is that they are making a couple $1 billion. They just did $6 billion of free cash flow, right? So they could pay this down or you know what I mean? So that's the other piece of bad news, but that's it. Now, the other piece of good news is look at shares outstanding. Obviously not during those years, but in the last 5 years, this is one of the most aggressive share buybacks I've ever seen. They bought back 6% of shares in the last year. That's a lot. That 6% is a lot for 1 year. So that's the other piece of good news. That's going to help out the stock price. But these numbers look pretty strong here. Okay. Now, what happened was their latest earnings report, they were previously they were projecting 10% revenue growth, and now they dropped it down to 3 or 4%. So it's not good, right? It doesn't look good, but I don't know. I'm still willing to take a chance with this one. Um, there's a I the bad news is it's possible that they're losing market share and that yes, their EPS is going down, but not according to the past, you know, these past 5 years look awfully good to me. So there's that, and then there's the fact that they have a bunch of debt. Okay, but again, we're going into a lower interest rate environment, which is good. The expenses won't be as bad, and there's just there's a to me there's a lot more positive signs than negative signs. Again, just to reiterate, the positive signs are positive revenue growth, strong net income, strong free cash flow, strong EPS, strong share buybacks, and insiders and hedge funds both buying. And then finally, which is probably the most important one to me, is the fact that they have this sort of strong market share in all these different segments. Okay, so that's my analysis for this stock. Let me know what you guys think down below, and I will see you in the next video.